Hello everyone, welcome to another video series by Valuation Interview Prep, which is on LBO model. So welcome to this 6-part video series on mastering the LBO model tailored in the classic investment banking style. Whether you are preparing for an interview or deepening your financial modeling expertise, this series is designed to give you a comprehensive yet practical understanding of the LBO process. In each video part, we will break it down step by step, making it easier to grasp the nuances of maintaining the depth needed for the real world application. So firstly, let's see how the model looks like and what all are the different sections of this model. So firstly, we will be talking about assumptions and sources and uses of fund. In this part, we will set the foundation by making the key assumptions: purchase price, EBITDA, multiple, and other some of the assumptions which you can see here, like tax rate, transaction fees. We will also build the sources and uses table showing where the money comes from and how it is allocated. This is crucial for understanding the initial capital structure and the transaction funding dynamics. In the next part, we will be discussing about profit and loss statement. This is mostly similar to the DCF model that we did for Infosys. This is again the LBO model for Infosys. We have already done a Infosys model based on DCF. So many of the assumptions for P&L will be coming up from this tab only. So herein you will be seeing the complete buildup of revenue, EBITDA, EBIT, net income, and from therein we will be going on to levered FCF. Mostly we will be also discussing about the changes, that how the P&L statement of DCF is differing from this LBO model, and what are the additions like PIK interest, and how we are coming up to levered FCF, wherein in DCF we were talking about unlevered FCF. Then post that we will be seeing about the debt structure, basically the unitranche debt structure. So herein we will be seeing unitranche is basically a single tranche structure. It can be multi-tranche structure based on the deal dynamics. So firstly we'll be seeing what all are the important metrics of the debt, be it leverage, the spread, the fees, if there is any PIK toggle. PIK is basically payment in kind. We will be also discussing about this. Then what is the debt interest schedule, how the debt basically interest expense is created. Then we have a section on debt pay down. So herein we will be seeing that what all things are going into debt. So basically what all cash is available to repay the debt, and what all parts of debt are we repaying. Basically, in what all forms are we repaying the debt. One can be the mandatory amortization, one can be pay down, and one is PIK interest, is again a very interesting thing which we'll be talking about when we will discuss about this debt structure. Then next we will be talking about lender analysis. So herein we have few credit metrics which are required by lender to assess their investment. Then we have in lender analysis, we have total cash flows which are going out and in to the lender accounts, and what is basically the IRR to the lender. And in next section, we'll be talking about the return analysis from the perspective of sponsor. So in sponsor, we'll be seeing that what previously at the initial stage, what equity was being funded by the sponsor, and how currently the equity is looking like, and based on that, what is the IRR which is coming out to the sponsor. Then we have some sensitivities also, like we will be seeing that target IRR, okay, right now is coming as 17.5%. What would be the different deal dynamics if we want a particular or specific IRR from this deal. Then we have sensitivity analysis, wherein we will be checking the difference. We'll be checking the IRR sensitivity based on spread and leverage. Then we have a simple the sponsor based equity, basically based on the entry multiple and leverage. So this is the percentage of sponsor equity in the initial total capital. So by the end of this series, you will have a fully functional LBO model ready to impress in interviews or apply in a professional setting. For now, we are wrapping up the overview of the model, giving you a clear roadmap of the journey ahead. Each part will dive into specific step by step. So stay tuned as we build the model together. If you like the content, let us know in the comments below, and don't forget to check the description for a downloadable Excel file to follow along. Thank you. Bye bye.